Welcome to Caribbean Business Review, where insight meets impact. We bring you economic and financial updates, sharp statistical breakdowns, and data-driven insights on the forces shaping the region. Smart analysis, bold ideas, real Caribbean intelligence. This is CBR. Welcome everybody to episode 4 of season 2 of the Caribbean Business Review. I'm Joseph Cox. Now, first of all, thank you so much for your continued support across all our social media channels and on MKR Radio. And thanks as well to those who joined us for our first CBR Thursday Live on TikTok. We invite you to keep sharing in this exciting and interactive new format. Our special guest this week is Orville Johnson, noted insurance consultant and former executive director of the Insurance Association of Jamaica, as we explore the Caribbean insurance crisis. And on the CBR briefing, we'll examine Jamaica's stake in Caribbean Airlines and ask the question, is it time to exit the sky? But before we dive in, a breaking development at the United Nations with big implications for the region. Trinidad and Tobago's Prime Minister Kamala Persad-Bissessor has declared that the Caribbean is not a zone of peace. That statement runs directly against the mantra CARICOM leaders have championed for decades, that this region is stable, safe, and open for business. The fallout could be real. Shipping insurers may begin to price in higher risk, pushing up already expensive freight costs. Investors could see Caribbean markets as fragmented and politically volatile, raising borrowing costs and slowing capital flows. And the tourism sector, which relies on safety as part of its brand, may find its reputation under threat just as global competition intensifies. Beyond symbolism, the cost of this fracture is a creeping risk premium across logistics, finance, and travel that this region can ill afford. It's a story that we'll be tracking closely. But for now, let's turn to the issues that we are tracking in our Market Watch and Global Pulse segments. Coming up in Market Watch, S&P upgrades Jamaica to BB, outlook positive. Caribbean Airlines axes Jamaica to Fort Lauderdale routes, and OECS moves to tighten citizenship by investment programs. Then in Global Pulse, U.S. current account deficit shrinks by a record 43%. UK pitches openness to talent as U.S. tightens visa rules, and global debt has surged to a record of $338 trillion. All that and more this hour on Market Watch and Global Pulse. Coming up next is the CBR briefing. This is your CBR briefing. I'm Joseph Cox. Caribbean Airlines has announced that it will end all service between Jamaica and Fort Lauderdale effective November 2, functionally severing the airline's airlinks between Kingston, Montego Bay, and South Florida. Fort Lauderdale is Jamaica's most important U.S. corridor, home to one of the largest diaspora communities and a key tourism gateway. Yet CAL has now walked away twice. First in 2019, then again in 2025, after briefly re-entering with fanfare. For Jamaica, this isn't simply a route adjustment, it's a breaking point. For more than a decade, Jamaica has been forced to watch an airline it part owns systematically dismantle its aviation sovereignty, one abandoned route at a time. And the irony is stark. At a time when Jamaica's tourism arrivals are at record highs, with 5 million visitors expected by the end of 2025, CAL is walking away from its tourism hub. But why the retreat? The numbers tell the story. In May 2025, CAL reportedly offered nearly 6,000 seats on the Kingston to Fort Lauderdale route. Only 1,892 passengers showed up, a 32% load factor. Montego Bay was no different, with just 39 to 40% utilization. Compare that with the competition. JetBlue and Spirit both filled 75 to 88% of their planes, even as Spirit was in bankruptcy protection. Southwest utilization was over 80%. So this isn't just about weak demand. It's about an airline that doesn't know how to compete. What makes this worse is CAL's decision-making. In December 2024, the airline reintroduced the Jamaica to Fort Lauderdale route with 3 weekly flights. By March 11th this year, They expanded to a daily service despite weak passenger numbers. So why double down on a failing route? Either the data wasn't reviewed or the decision was political, a gesture to claim they were serving Jamaica while burning through cash. Ironically, Jamaica is now Cal's ATM. Indeed, Jamaica is left holding a minority stake in an airline that wastes money and abandons its markets. And Cal's financials tell the same story of contradiction. Earlier this year, Trinidad's then Finance Minister Combe Imbert announced that Caribbean Airlines had posted an operating profit of $12.1 million in 2024. But strip away this spin, and here's the reality. That figure was down 51% from the year before. It excluded debt service and it came off revenues of $444 million, barely a 2.7% margin. And the so-called turnaround was bankrolled by Trinidadian taxpayers, between 40 to 73 million million per year in subsidies for the domestic air bridge, 285 million TT to cover lease payments during COVID, millions more for fuel support. So let's ask the obvious question. Why is Jamaica still a shareholder? Trinidad got the subsidies, the connectivity, and the jobs. Jamaica got nothing but exposure to risk and humiliation as Cal pulled out of Montego Bay and Fort Lauderdale. When Air Jamaica was absorbed in 2010, Jamaica was promised a 16% stake. Today it's 11.9%, diluted after fresh capital injections by Trinidad. And what do the Jamaican taxpayers get for their investment? No audited statements since 2015. $60 million spent on consultants for audits that never materialized. Contradictory financial claims from Trinidad's own finance ministers. A revolving door of executives and board chairs. For Jamaica, this isn't just poor governance, it's disenfranchisement. For many Jamaicans, the closure of Air Jamaica remains a painful memory. Yes, it was losing money. Yes, it was fiscally unsustainable. But it was also a source of pride, Jamaica's colors flying across the world. In exchange, Jamaica accepted a minority stake in Caribbean Airlines. But what does that stake represent? Cal is branded explicitly as Trinidad and Tobago's national airline, with no trace of Jamaica. There is no meaningful Jamaican representation in its branding or governance. Employment benefits? Minimal at best. Few Jamaicans, if any, serve as Cal crew. So what's the point of holding the stake? Jamaica owns nearly 12% of an airline that brings no pride, no jobs, and no strategic value. Let's be clear. Jamaica traded Air Jamaica for a minority shareholding in an airline that squandered its roots, diluted its ownership, burned taxpayers' money, abandoned Montego Bay and Fort Lauderdale, the lifeblood of its tourism market. At this point, Jamaica isn't a partner. It's an afterthought. Sometimes walking away isn't failure, it's strategy. Jamaica should liquidate its stake in the Caribbean Airlines and reinvest in Open Skies partnership that deliver real value, more competition, more carriers, stronger connectivity, and tourism growth. Because the cruel truth is this, Jamaica hasn't just lost an airline, it's losing its sky, and the only way to reclaim it is to exit Caribbean Airlines now. This is your 90-second market brief on Caribbean Business Review. In Jamaica, S&P has upgraded the country's sovereign rating to BB with a positive outlook, citing its strong fiscal track record. At the same time, the government is pushing tourism ambitions with a new 8x10x5 target, 8 million visitors and $10 billion in earnings within 5 years. But challenges remain. The trade deficit has widened as imports climb and exports fall, and Caribbean Airlines is set to discontinue its Jamaica to Fort Lauderdale routes by November. In the Bahamas, unemployment stands at 10.8%, with youth and women hardest hit. Over in the Cayman Islands, a new report shows financial services drive 62% of economic activity and nearly 2/3 of government revenues. In Trinidad and Tobago, a new bill has proposed a 3-year crypto ban. Meanwhile, the OECS is moving moving to tighten its citizenship by investment programs with a regional regulator and stricter compliance rules. Elsewhere, Bermuda is seeing a surge in new insurance registrations, while the Caribbean Manufacturers Association has outlined an ambitious growth plan to lift regional exports by 30%. On the investment front, Grenada will pilot a retail bond for households. Antigua has boosted port capacity with a new $15 million crane, and in Guyana, ExxonMobil has sanctioned a $6.8 billion Hammerhead project, which will add 150,000 barrels per day by 2029. Now that's your market brief. I'm Joseph Cox. For more, find us on YouTube and Spotify.
In a world of constant change, insight is your greatest asset. At Joseph Cox & Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox & Associates. Insight, experience, impact.
Still ahead on Caribbean Business Review, our conversation with Orville Johnson, insurance consultant and former executive director of the Insurance Association of Jamaica, as we discuss the Caribbean insurance crisis.
Insurance is sold rather than bought. And even where you are supposed to have it, take motor insurance, you probably have a 85% take up, although the law says everybody who drives a vehicle must be insured. So you have at one extreme, that on the motor side, and on the residential housing side, you have another problem where people, especially after they pay for the mortgage, they don't feel they must buy insurance. And if the mortgage company will force them to buy the insurance, they probably wouldn't buy it in the first place.
Welcome back, everybody. This is the Caribbean Business Review, and I'm Joseph Cox. And today, my special guest is a good friend of mine, Orville Johnson, who is the former executive director of the Insurance Association of Jamaica, and well-respected insurance consultant throughout this region. And indeed, Orville, when I first met you, you were the head of Omni Insurance.
Absolutely.
At NCB. So,
breaking new ground.
It's been a while.
Yes.
It's been a while. But I mean, no, I cast it in that way because you have a deep background and experience within the sector. And one of the things that I wanted to really look at today, really and truly, is that we've been hearing the stories. 80% of people, of homes, properties are uninsured. Of the remainder that are insured, most are underinsured. 90 to 95% are underinsured. You have issues where there is inconsistencies across the market. So, for example, comprehensive insurance in Jamaica is not the same as comprehensive insurance in, for example, Guyana. They mean totally different things, frankly speaking. The coverage levels are less. In other words, there's no seeming standard across the region, and it raises a real question. Given inconsistency, of course, we know the matters with health insurance, aside from premiums going up because of costs of health care, there's also insurance fraud with it. So we're not going to get away from that. But the obvious question is the insurance sector, is the industry in crisis within this region from where you sit?
Let me answer it this way. There have been some recent newspaper reports.
Yes.
One in particular, story of general accident, based in Jamaica primarily, but also in Barbados and Trinidad. And they have made a strategic move where the former CEO, Sharon Donaldson, now will have a group CEO mission to really spread the general accident across the Caribbean and to take a bigger share of the market. So that in itself tells you what the story is. Started in Jamaica, went to Barbados, went to Trinidad, and have decided to increase their footprint. We just heard that GK insurance has restructured, so they now have a GK Life, and as well as a GK General, and the general insurance companies have also spread into the Caribbean, into various territories, and spreading their wings. When one looks at a Guardian, they are also in the Dutch Antilles. So what is emerging is a real Caribbean insurance. It has emerged as a Caribbean insurance company. And if one sort of looks back to the biggest problem we had in the industry, and we have had two major, we had the FinSAC crisis, and of course, as you might want to talk about, CLICO crisis.
Right.
Out of that, the Jamaican insurance industry, apart from the government intervention, it survived because the Trinidadians through Guardian Life, and which incidentally a lot of people don't know or don't remember, Guardian Life was Mutual Life Trinidad. So the child came back to help the parent when the parent was in trouble.
Yes. Yeah.
And then Barbados Mutual, which became Sagicor. Sagicor bought into Life of Jamaica. So the two giants of the industry in Jamaica were having a serious time. And if you remember that time, boy, people were having stories were going on all over the place about what would have happened to the life insurance industry in Jamaica. It crashed. And emerging out of that process, Joe, is two very large insurance conglomerates. And we're saying that there have been other entrees into other markets. I mean, Sagicor now is also gone into Costa Rica. Some things happening in Canada. So there's a vibrancy in insurance market in the Caribbean. I think GK had also bought out some aspects of Scotia Life down the Caribbean, and they have put that together. So I think that is now going to be part of that GK Life portfolio, which will have a footprint across the Caribbean. So if one looks at these stories, and these stories are new, because some of these stories are 2 weeks old, although they have been happening gradually. And you have, of course, you have the good old ICAA insurance company of the West Indies that they took that strategic position many years ago, and they're in the Cayman, they're in the Bahamas, they're in Trinidad, and a couple of other countries. So it would seem to me that the Caribbean insurance industry has done what has not happened in CARICOM as a whole. Because we've been talking a lot, about CARICOM economic integration. And I think we have been, and you can speak to it even better than I because you work with the CARICOM Secretariat. And we have been waiting on the politicians to do it. The truth of the matter is, Joe, the expansion is going to take place on business decision made by the various businesses and the investors in the region. And if we want to look at what has happened in the Caribbean insurance industry as an example, we have done better. I remember they quoted a figure about the amount of interaction and trade within the Caribbean at the last CARICOM conference. I don't want to call the wrong figure, but it's appallingly low. Now we have a situation where, look in the airline business now, Caribbean Airlines about to shut down their flights into Fort Lauderdale. And when they trot out some numbers that you want, it was an erratic decision. When you see the load factor going into these destinations from JetBlue and other carriers compared to what is coming from the Caribbean, you wonder what is happening.
No, indeed. No, I take your point quite well, and where that one is concerned, indeed, part of the offering of this program for this very week is looking at whether or not it's time for Jamaica to basically step out of Caribbean Airlines, because truthfully, if you are cutting off basically, you're cutting off the airline from
Yeah.
the tourism hub in Jamaica, but Jamaica
Yeah.
is still a shareholder. Then what's the point?
What's the
I mean,
point?
it's an obvious question.
Well,
But no, but going back to the insurance part of it, Orville, because my challenge with it is the lack of standardization of the
mhm,
offering. And
mhm,
I, for the life of me, I'm trying to understand or trying to determine, is there any work that you know of as at this point in time where there is an attempt to standardize the offering across the region? Because I don't understand, for example, if I have my Sagicor, if I have a Sagicor policy, for example,
mhm,
in Jamaica, for whatever it is, health or life or whatever it is, if I have a policy in Jamaica, it is not necessarily the same thing I'm getting in Barbados, and it's
mhm,
certainly not the same thing I would have been getting in Guyana.
mhm.
And I don't understand what is the reason for the differentiation between the markets, and is there any attempt to standardize?
Well, it should be interesting to see that from the point of view. I know classic marketing will tell you that the products are developed for the particular peculiarities of that market, and that's why they are different, right? And that
Possibly.
sounds like a good logical answer to state. But you also need to see at the same time that is not that there are disparate organizations and countries, because Sagicor operates across the Caribbean. Guardian operates substantially across the Caribbean. So if you wanted a case for some standardization, at least within the companies, there should be some level of standardization or some explanation as to why you have that differentiation. You know,
Yeah.
what is behind it. There is some level of collaboration at the regulatory level. But I don't know how strong that is in terms how they influence one another, and they are linked in an international system, so they know what the standards are.
Right.
But yes, and it has come up from time to time that there needs to be a little bit more coordination between at the regulatory level. And I know places like Inter-American Development Bank have attempted to do some studies in various areas, and that might be something they might want to look into. But the organizations are thriving, notwithstanding all that you have said.
No,
Both
I'm not.
Sagicor and
Trust me,
Gardner, you know?
I'm not knocking that in any shape or
Yeah.
form.
But
But the thing is this: where I'm going, because I'm glad you raised the issue of the matter of regulation, because I note with interest that Jamaica is embracing the Twin Peaks model.
yes.
And I'm wondering what if you had any thoughts, any specific thoughts on that sort of development, and further whether or not you would see that as obviously if it is successful in Jamaica, if you would see that as having a potential of being rolled out throughout the region, and even if it fails, but for there to be the development of a framework, a regulatory framework that is standardized and treated right across the region.
Okay, my thoughts on it, I think it's a positive mood, and I'll tell you why. How the Twin Peaks operates is that they're going to separate the heavy lifting, the capital adequacy, and the strength of the organization, that aspect of the regulation, and that is going to be moved to the central bank primarily. The central bank in Jamaica has significant technical capabilities, and I suspect the feeling is that they are well placed to take up that role. And then on the other side of the twin now is the customer, the response to the customer, and that herein lies what you're talking about. Because we have had a lot of complaints, and to be fair and honest about it, I know particularly where the complaints come from, particularly the motor side of the business. You know, there are lots of issues where that is concerned. I can't stay off the top of my head what happens in some of the other countries. But there are concerns, not only, I think that the Twin Peaks are going to see the regulators looking at the banking side too. And you know that the BOG has already sort of started their thing in terms of the ABM standards.
Right.
So this is an attempt to give the consumer a better bang for his money and some focus and concentration. And one gets the impression, again, looking at what the Bank of Jamaica has started to do to put up some kind of rating system, for instance, in terms of ABM uptime. So the regulators will be able to reflect to the public how each one is doing against each other. And for that is a victory for the consumer. And from an organizational point of view, what that will do is create more focus. So in other words, if you have a problem and you can't get a claim settled, you call that section of the FSE, and they're not busy doing all kind of capital adequacy tests. Their mandate is to ensure that the policyholder gets their value. And it's important too, with respect to the insurance market, as you pointed out, because what we know is that there is a kind of distrust of insurance across the Caribbean.
Absolutely.
Right? Let us be frank. I've been in insurance business for a long time. The banks enjoy more trust than the insurance companies. And there are people who feel that, boy, this thing is a kind of a con, right? So therefore, it is good if we can have third-party endorsement where the regulator can say, boy, them guys are right, you know? So, or to know that there is somebody to appeal to other than the particular insurance company which might be protecting their flanks. In my former role at IAJ, we did a lot of brokering of issues because, as again I said, most of it happened on the motor side of the business. Because a lot of times they hear about road safety, you hear about the people who die. But believe it or not, Joe, the motor insurance companies get over 1,000 claims a month because of how we drive. Let us be fair. We all drive on the road and we see what is going on. Over 1,000 claims a week. So there are a lot of issues going on out there. And yes, the insurance companies and the motor insurers must step up their game, and they're trying. They're using technology and all kinds of stuff in terms of you filing a claim and technologically and getting that kind of response. People now having their own cameras so they can tell their own stories and not just depend on what is written in a report, because you know what happens. Accident, everybody right. So even if a man say, yes, I was wrong in a turn, by the time go home and them friends say, yeah, idiot man. No, the story change, and we have seen it happen so often. Right? Yeah. What is going to help is that the government itself going to have a lot more cameras around for their own purposes in terms of the implementation of the Road Traffic Act and all that. But there's a distrust of the insurance industry. Plus, let's face it, in marketing terms, insurance is an unsought good, As there's a popular phrase they have at one of the international insurance conference. Nobody gets up in the morning and says, let me buy some insurance today. Right? That doesn't happen. Right? Insurance is sold rather than bought. And even where you're supposed to have it, take motor insurance, you probably have a 85% take up, although the law says everybody who drives a vehicle must be insured. So you have at one extreme, that on the motor side, and on the residential housing side, you have another problem where people, especially after they pay for the mortgage, they don't feel they must buy insurance. And if the mortgage company never force them to buy the insurance, they probably wouldn't buy it in the first place. And
a lot. No, but you say, OJ, part of the challenge is this, that if you're not careful, the cost of the insurance in a lot of the cases actually rivals the actual mortgage payment. So it is not an inconsequential sum.
Yes, I agree. It's a difficult situation.
I'm sympathetic, but I take your point extremely well.
Yes, it's hard. I know. I just finished paying off mine, and you really have to know it's a good thing they have financing arrangements so you don't have to pay it one shot. But the thing is, we are in a region where it's not just hurricane, because people don't say, boy, hurricane season, I can insure my house. We are in an earthquake zone. Earthquakes have no season, and we have had quite a bit of earthquake activity over the last 2 years. So
Yes,
the
indeed.
reality of the risk that we have is significant. And then the unfortunate thing is that, our money not all that strong when you convert in US dollars. But we are
Yeah.
zoned in the same area for insurance as the United States and all that. And there's a time when the hurricanes would pass through here and touch. Boy, Cuba used to get touched every time. We used to be sorry for them. Poor Haiti get licked one time, and we dodged the bullets so many times. But once you have a hurricane now that hit mainland USA, and in the last 5 years it has been happening on a regular basis, that's
Obviously, quite
serious
so.
business when you get to a place
Yeah.
like up the Florida coast where you have them, man, they have them fancy boat and them fancy say, beach house
Yeah.
and all that kind of stuff. When you
Yeah.
hit those places, then the thing is significant. And then it's transferred to the premiums because
Yeah.
we get up the insurance industry get a bad name. But we can also get cussing from the reinsurers because of the competition that exists here. The premiums stay lower than they think it ought to be for a hurricane zone and an earthquake zone. So they've been saying that
But
you guys not paying enough premiums as high as it sounds. We had a serious crisis about a year or two in terms of capacity.
no, but now that creates a even greater challenge because
Yes.
part of the issue we do have is that for a lot of people they deem insurance to be unaffordable, right?
Yes.
So if the reinsurers, for example, the overseas reinsurers are pressuring you basically to up the premiums even further, then the actual participation rates fall even further. Yeah.
Yeah. It's a challenge, and I think the industry is trying to deal with it to a large extent with more premium financing. So more and more persons will pay a monthly premium, just as they do with life insurance. 'Cause life insurance is really annually, but it has been made convenient for persons because it is what it is. The house values what it values, Joe, and there's nothing an insurance company can do about it. Let's face it. So that's a reality that we have to face. There's a problem in the reinsurance market about 2 years ago, which kind of slowed down a bit because with the rise of global inflation, interest rates had gone up. I remember reinsurance is a business, and the persons who are investing in the reinsurance business saying, but if I can get some reasonably good returns safe, why am I investing in something as risky as insurance,
Yeah.
especially within the context of climate change? So we had that crisis, but things are a little bit better now, and hopefully we shouldn't see that kind of. So there's a catching up, and there's a big leak with the reinsurance premium that affected everybody down the line a year or two ago. But hopefully it has moderated now. But we have a serious problem, and if you talk to the people who live in Florida, the reinsurers left Florida because they just
Yes.
couldn't manage the thing anymore. So it is a reality that is being grappled with right across the world. I mean, California has its own problems with the fire because these crises, I mean, there are no control. I'm careful how I talk because when you tell people about acts of God, right? So you say the hurricane and all that destruction is an act of God. But things happen, and
Yeah.
look at that freak rainstorm we got last week. You
Yes,
know,
indeed.
I mean, I
Yes.
heard one of the scientific people talking about. Well, they said within 2 hours you got what would be quarter of the month's rain in September. Can you believe that?
I,
So it's
I,
a
I
new
don't
phenomenon.
doubt it. I
Said I've never
genuinely
heard
don't
it
doubt
before,
it.
but it appropriately described what happened because I got
Yeah,
caught in
I
it
don't
too.
doubt it.
He said they call it a rain bomb. It's something
Yeah.
that is emerging across the globe now. A rain bomb because it was a bomb.
Yeah.
you know?
No, because seriously, because that is what contributed to a lot of the flooding, etc., etc.
Yes.
Because, for example, the drains would have been overwhelmed, etc.
Absolutely.
But
There are
but
no dreams
but
that were made for that.
no,
Mm-hmm.
sir, no, not at all. But the question for me would then be, if we are faced with, because climate change is real,
Mm-hmm.
right? And it's not
Yep.
going anywhere.
Yep.
But frankly speaking, for example, United States, where that, as you quite correctly put out, affects our reinsurance rates, affects
Well,
our premiums here. But they don't believe. They basically are climate change deniers. Where do
yes.
we go? Where do we go now? What do we do at this point in
I
time?
wish I knew the solutions. I'd win the lotto. But we're in a difficult place. We're in a difficult place, and I know there's a campaign on recently encouraging people to look at their insurance arrangements to see if your
Right.
values are correct, so that average clause don't catch you when you have a catastrophe. But the fact of the matter is that it's going up. The values are going up. What you're going to do? What you're going to do is not an easy solution. It's just that the insurance premium is more and more becoming a significant part of your spend on everything. And it's happening literally across the globe because the global crises and all that, it's happening everywhere. Even in societies are
But
well organized places in terms of drainage and all that. They have things that them can't even explain and understand.
no, indeed. But from where you sat, and of course, giving you a wide experience, how much innovation is actually being brought to bear in this sector right now? I mean, in terms of effective products and services that could, over the medium, and probably not in the shortest term, but over the medium to long term, really push that cost trajectory down.
Well, as I said, the small one that everybody now try is the premium financing. So just spreading the premium into manageable amounts that you can take out of each paycheck is one way of dealing with it. Because when you get
Yeah,
that
but that
notice
comes
and
at a
say
cost.
it comes at a cost, but it's better than you get an annual premium notice and you want to jump off the roof. So at least every month you're paying a little thing so you know you have something in place. I remember one company did something recently where they, about a couple of years back, where because of our history with Gilbert, they had some policy in terms of the roof because a lot of the Jamaican houses are well made black and steel. And sometimes when they get damaged, they still have a good basic structure. And if you get enough money, you can try juggle around
Right.
and fix it back if it's just the roof. Although people have now learned how to secure the roof, hurricane straps and all that kind of thing. But it's the solutions are not easy to find. If you just
No,
think about it.
I
As I
realize
said, is
the
what it is.
solutions. No,
Yes.
I realize the solutions are not easy to find, but I mean, you see, the frank truth of it is that if let's be real, if the cost is too high, people are not going to participate. They're
Yeah.
going to opt for the quote unquote own insurance or the self-insure,
Yeah.
which has its own risks.
Which the
Two,
just as the mortgage companies won't allow that, right?
no,
So
they
yeah,
won't allow
yeah.
that. But then,
Good.
if the insurance premiums are too high, then frankly, even the mortgage companies will
That
suffer
might
because
affect
people
their
won't be
ability
able
to
to.
buy a house. Yeah.
Exactly.
Yeah.
So there's a catch-22 situation.
It's
But
difficult.
then the other side of it now is when you start to look at in terms of the cars and the driving and so on. I mean, to my horror, right? I remember when I was working in another country, and things like my no claim insurance was irrelevant. Year after year, the
You just
premium
said,
remained
yeah.
exactly the same, and there was no claim no claim of any substance being applied. So yeah, you're saying, but this makes no sense because year after year, the value of the motor vehicle, for example, depreciates. That's just
Right.
a reality of life. So
Right.
how is it that the premiums remain constant? And there's a long-standing battle. So I mean, when you speak about trust and trust among partners, basically, because that's what the customer and the company would be, partners. I wonder what is being done effectively to bridge that divide. Because clearly you have different players right across the region doing all sorts of things.
And Cedric Stevens keeps writing because you have to give him credit. He has been on the case and he sees these anomalies and he poses a question. Sometimes he puts some solutions. He reads widely to see what happens in other jurisdictions, and those things come up. But it's not, there are no easy solutions. And the companies sometimes try to innovate, but basically it's within the same range. It's within the same range, and then a lot of people buy the cheapest they can get, that they don't even know what they buy until they have a claim. And sometimes you blame the company.
True.
The company say, listen, sit down, let me explain some options for you. You could
That's
get
what
an
you
extra.
want.
This it will cost you some more, but it will protect you some more if you have a claim to make. Nobody want to hear about it. If they just give me the cheapest one and I'll sign and pay my money. And so I ensure that I satisfied both with the government and my motor insurance company, the motor lender, the banker.
Yeah. But because we're running out of time now, Orville, and I mean, we could not have this conversation and speak about trust and not raise the issue of what happened with Clico. And of course, I'm sure they have other examples throughout this region that have occurred. To what extent have mitigating strategies been put in place that would preclude a recurrence of what happened with Clico?
I think the regulators understand what happened very well now, because the amount of papers that have been written about it, particularly coming out of the multilaterals, and you get a sense of even what I quoted recently, earlier in the interview, that Bank of Jamaica has a financial stability report that they do, and they report, and the figures that the life insurance companies have a rating of 206.9 average, which is higher than the 100 that they are required. So they are well above the regulator requirement. So the general companies are 219.5 above the average of 150 they are required. So at least you can look at the Bank of Jamaica's stability report, which sort of measures the strength of the company. So some countries have put these things in place, so you as a consumer can tell, and there's a fair amount of transparency. A lot of these companies are listed on the stock exchange, so their reports are out there, and you can, as best as you can evaluate what is happening. But I think Clico and FinSac they have been learning experiences, and they are unlikely to recur. I know that there was some attempt to try put in place some kind of workout strategy in the Caribbean, but last time I went to a conference and it came up, I hear the level of cooperation was really, it just never happened. And I think the big two went to do stuff on their own, and because the consequences for those economies were significant, both with Clico and what happened with FinSac in Jamaica. So Jamaica has a very robust ecosystem in place to keep things in check, and they follow up and they do inspections and all that kind of thing. And we also know more about it, because there are some things we never knew about, using short-term money to go long-term, and that mismatch of assets and liabilities. A lot of us learned these terms that we didn't know before. So risk management is now practiced as a given, and the laws have been changed. Because part of what happened in FinSac, the companies, the regulators, the companies, and then the economic environment. Don't forget that. Sometimes the economic environment creates a part of the problem, being not sufficiently stable. So the government has to do its piece in terms of the regulations. It has to update the actual laws that cover it to ensure that they are good enough and that persons are held responsible. They must also update the legislation, because things change, and then the supervision has to be strong. People have to go in and look at the thing and track the situation, so you don't wait until you have a crisis. And I think certainly what we have seen in Jamaica for the most part is that they have a very, very strong regulatory environment.
Yeah. No, I mean, there's a fair comment, but you see, the truth of it is that I don't know, because every now and again you hear the sub stories,
You're
the
a little
horror
thing.
stories that coming
Yeah.
out of it.
Yeah.
So
Yes.
I don't know if that is. I know it is necessary. Don't get me wrong,
Mm-hmm.
but is it sufficient
Mm-hmm.
to treat with the crisis of confidence?
I say yes and no, and there's something you mentioned before, and there's that element of one in the last case, and we can't say it because of them, but there are fraud elements, that sometimes not as easy to pick up in the best of regulatory circumstances. So it has to go beyond, you have to just learn from new things that happen, and they just have to up
Yeah.
their game in terms of what they
Well,
do.
I mean,
It's.
I must tell you,
Mhm.
Orville, one of the things that always fascinated me, and you see, when you're in management in any enterprise, is when you start to actually see some of the data and things.
Mhm.
When I realized that, for example, people were abusing the health insurance, in
Mhm.
one instant, I will never forget it. The person, one of the persons had an arrangement with obviously a friend of theirs, right? And he would use the health insurance card under the guise of getting medicine, right? And you know what the medicine was? They
Mhm.
bought things like a lamp, table lamp, all sorts of things that have
Yes,
nothing to do with it. But
yes.
the
Back in the day
downside of
when
it is
light
that,
was on, I saw some of those things. Yes.
yeah. So yeah, you end up with the usage levels going through the roof, right?
Yeah.
And of course, the health
Yeah.
insurance premiums jump up accordingly. So I mean,
Jump up.
and
Yes.
those are some of the issues that I'm also concerned about level of control and whether or not the monitoring
Mhm.
is that robust that we pick up these things, because it impacts everybody, frankly.
It's a bit more robust now because technology allows you to do some things that you couldn't do before. But you have a cultural
Hmm.
problem where
Yeah,
somebody
well,
feel that, boy, if I do a little thing on the insurance company, they have a whole time thing, I don't even want to say it because they feel that if you take it from them, boy, you're just getting back what you're due. So there's nothing wrong with
yeah.
that, you know?
Sad to say, and you see that in the motor claims, where if you go to a thing and ask if it's an insurance claim, or once an insurance claim, all of a sudden the damage estimate jumps
All of a sudden.
considerably,
Yes,
which makes
yes,
no sense.
yes. And then people don't realize that when they're doing that, they're pushing up the premium. You're
Exactly,
pushing up the premium.
exactly.
And it's going to come back, going to
It's,
come back. Claims
it's
gone up,
amazing.
you have a problem. I mean,
Yeah, indeed.
let me this one. I don't want to forget this one. I mean, when COVID came, a lot of us felt that the claims would drop significantly. So let's give everybody a break on the premium. A lot of companies did both here and overseas, and that was not the experience we had. And sometimes we wonder how these claims could happen when people were locked down. It eluded all logic. you know,
Something is really wrong with us.
so we
We need
recognize
help.
that part of the thing is cultural, and we just have to put in the work.
Yeah, indeed. All right, my friend, I have to leave it there for this
Yes.
time. So thank you very much, Orville
Well,
Johnson, former
thanks for
executive
inviting me.
director.
Congrats on your show. I think this is a very important addition to the discourse that we have. And the whole thing of financial literacy, which is one of my passions. We need more financial literacy. We need more discussions like this that we have had here, which don't get so
Yeah.
technical that the ordinary Joe can't follow what is happening,
But that's the point. That's the art of communication. You speak to
Absolutely.
your audience, not at them. So no,
Absolutely.
man, I take your point quite well. So thanks so much, Orville.
Thanks again. All the best.
All right, all
All
the
right.
best. Good.
Good.
Cheers.
In a world of constant change, insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. excellence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
Welcome to Market Watch. I'm Joseph Cox, bringing you the latest economic and financial updates across the Caribbean. We begin in the Cayman Islands, where a new capital economics report shows financial services now drive 62% of economic activity and 65% of government revenues, with industry employing nearly 7,000 people. Turning to Jamaica, there's a double dose of news. First, S&P upgraded Jamaica's sovereign credit rating to BB with a positive outlook, citing a decade of fiscal discipline and a debt ratio trending below 50% of GDP. At the same time, Prime Minister Andrew Holness has outlined a new medium-term economic plan focused on productivity, financial inclusion, and innovation, while Tourism Minister Edmund Bartlett has set an ambitious 8 by 10 by 5 goal: 8 million visitors and $10 billion in earnings within 5 years, as the country looks towards 5 million tourists by year end. In Bermuda, the insurance sector continues to boom. 41 new insurers have registered so far this year, putting the markets on track to surpass last year's total. The Bahamas, however, is grappling with labor market strain. The national unemployment rate reached 10.8% in January, with youth joblessness at more than 20%. Ghana also remains in focus. ExxonMobil has sanctioned its $6.8 billion Hammerhead project, set to bring 150,000 barrels per day online by 2029, lifting total offshore capacity to 1.5 million. Yet, U.S. senators are pressing Exxon on the controversial tax arrangements in its Stabroek Block deal, raising questions about who ultimately pays the bill. Meanwhile, in Trinidad and Tobago, Parliament is considering a bill that will ban cryptocurrency trading and services for 3 years. Around the region, the OECD states are moving to tighten citizenship by investment programs with a new regulator, mandatory biometrics, and a region-wide minimum threshold of $200,000. Caribbean Airlines will withdraw its Jamaica to Fort Lauderdale routes from November 2 as part of a profitability drive. The Caribbean Manufacturers Association has charted an ambitious growth path with targets to raise manufacturing share of GDP to 10% in the medium term and up to 20% over the longer term. Grenada will pilot a $5 million EC retail bond for households on the ECSC, while Antigua has boosted port capacity with a $15 million crane upgrade. And Jamaica's first global bank has introduced a 1% mortgage deposit product aimed to making home ownership more accessible for first-time buyers. Finally, regional innovation has also gotten a boost as IDB Lab committed $2 million to a fund targeting more than 40 early-stage tech startups across Latin America and the Caribbean. Now turning to our markets. On the currency front, regional exchange rates held steady. The Jamaican dollar traded at 161.26 to the U.S., while Trinidad and Tobago's dollar stood at 677 and the Guyanese dollar at 218 to 1. The EC Caribbean dollar remained firm at 2.71 to 1 U.S. dollar. Turning to equities, Caribbean markets posted mixed results. The JSE index climbed 1.3%, while the All-TNT index gained 1.12%. Elsewhere, the BISX, BSE, and BSX and ECSE were unchanged. Among individual movers, JPS scores 7%, surged 15.77%, and Kingston Properties rose 15.01%, while MPC Caribbean tumbled 15% and Pulse Investments slipped 14.9%. Now that's your Market Watch. I'm Joseph Cox. Global Pulse is up next. Welcome to Global Pulse. I'm Joseph Cox, bringing to you the latest international economic and financial developments. Canada is showing a fragile recovery. GDP grew 0.2% in July after 3 months of contraction, driven by mining, manufacturing, and transport. But retail trade slipped 1%, and Q3 growth is tracking just 0.8% annualized. S&P sees only 1.2% growth in 2025, with unemployment near 7% and trade uncertainty clouding the outlook. The Bank of Canada, after cutting to 2.5%, is expected to ease once more before holding rates steady. In the United States, the current account deficit narrowed by a record 43% in Q2 to $251 billion as imports plunged and exports of goods and services improved. Yet, tariff-driven strengths continue to distort trade flows. The OECD lifted its 2025 global growth forecast to 3.2%, but warned the full impact of Washington's tariff hikes, now at an effective 19.5%, the highest since 1933, could sap investment and consumption. Now, in our country roundup, in the United Kingdom, as the U.S. imposes a $100,000 fee on H-1B visas, London is pitching openness. The government is weighing scrapping visa fees entirely for top global talent, such as graduates of the world's leading universities, to strengthen the UK's financial hub status. In China, the central bank held lending rates steady for a fourth month, balancing weak domestic demand against resilient exports and easing trade tensions. In Canada, Canadians shunned U.S. travel in July, down 32% year over year in trips, while overseas visits rose 8.3%, and inbound U.S. visitors to Canada hit 3.3 million, signaling domestic and long-haul tourism momentum. Germany Economic Institute nudged their 2025 growth forecast up to 0.2%, but unemployment has climbed above 3 million for the first time in a decade, underscoring continued pressure from trade shocks. In Japan, core inflation slowed to 2.7% in August, still above target. PMI data showed services holding firm while manufacturing contracted, highlighting a mixed outlook. In Nigeria, revenue surged 411% in 16 months thanks to sweeping tax reforms, with VAT collections tripling and oil receipts climbing sixfold. Well, over to UNCTAD, where they have cut their 2025 maritime trade outlook to just 0.5% growth, citing tariff shocks and geopolitical disruptions. And globally, debt has surged to a record $338 trillion in the first half of 2025, approaching pandemic-era highs. Analysts warn rising government borrowing, higher yields, and protectionist trade policies could strain fiscal space and test the resilience of the global financial system. Now, turning to the markets, energy markets showed mixed moves at the weekend. WTI crude rose at 1.1% to close at $65.72. Brent climbed 1% to $70.13, and the OPEC basket advanced to $71.50. Natural gas, however, slipped 2.4% to $2.84, extending its recent weakness. On equities, Wall Street finished higher. The Dow Jones gained nearly 300 points, S&P 500 rose 0.6%, and the Nasdaq added 99 points. Europe followed with solid gains, the London FTSE up 0.8%, Germany's DAX up 0.9%, and France's CAC up nearly 1%. But Asia was split. Japan's Nikkei lost 0.9%, and Hong Kong's Hang Seng slipped 1.4% as investors weighed tariff pressures and slowing regional demand. Now that's Global Pulse, connecting the trends shaping economies and markets worldwide. I'm Joseph Cox, and this is CBR. Well, that's a wrap on episode 4 of season 2 of the Caribbean Business Review. Let me express my profound thanks to you, our loyal audience across all our platforms, including MKR Radio. We do appreciate your continued support as we live by our mantra, knowledge is strength, but information is power. Our special thanks To our guest this week, Orville Johnson, noted insurance consultant and former executive director of the Insurance Association of Jamaica, for his valuable insights on the Caribbean insurance crisis. Now, so here are some key takeaways. Low coverage and trust. Roughly over 80% of homes remain uninsured, with affordability, weak consumer confidence, and insurance seen as an unsought good, limiting uptake. 2, you have sector challenges where natural disasters drive up premiums, while inconsistent products and fragmented regulation hinder stability and growth. And 3, there's a need for reform. Greater regional standardization, stronger oversight models like Twin Peaks, and regulatory collaboration are essential for a cohesive insurance framework. Now, please remember that this program is also available on Spotify. And don't forget that the latest edition of the Caribbean Financial Dispatch newsletter is live on josephcox.org, LinkedIn, our WhatsApp channels, and linked in the YouTube comments. You can also subscribe directly by emailing us at caribbeanbusinessreview@gmail.com. As always, we invite you to like, share, and subscribe, and follow Caribbean Business Review on TikTok, Spotify, YouTube, Instagram, X, and LinkedIn. Until next week, same time, same place, I'm Joseph Cox, and this has been CBR.